Today we'll hear from company president Céline Dufétel, who will tell us about how Checkout.com is still in growth mode and that it has its eyes on the US. Please welcome to the stage Céline and our moderator, Christine Hall.
Great. So thanks so much, Céline, for being here.
Thank you for having me.
Yeah. So it seems like Stripe had figured out the online payments sector, but then a decade ago, Checkout.com, appears out of nowhere, and you've now, fast forward to today, you've now raised over $1 billion, and you've carved out a place for yourself by going after big clients like Netflix and Farfetch, while Stripe focused on consumers and small merchants. So therefore, some people like me and perhaps the people in our audience might not exactly know who Checkout.com is. So tell us a little bit about what you do.
Sure. So we are a global payments platform. We own our technology and have built our technology end to end, right? So it's all our proprietary tech stack. And we are, we provide direct integrations into the schemes and, of course, alternative payment methods all over the world. We're a regulated business, right, as we move money all over the world. Like you mentioned, we focus on the enterprise segment. And we really pride ourselves on solving really complex payments problems for those global enterprise merchants. We recognize that there's constant innovation in the payment space. There's a lot of different regulation all over the world. There's lots of different payment methods all over the world, and so we help abstract the complexity of payments for those global enterprises and really focus on driving top performance of payments for those businesses.
Okay. And since the company is compared to Stripe quite often, is the going after the big enterprise clients, is that still kind of your unique selling point, or have you evolved into other areas since then that have so that you're able to stand out a little more?
Yeah, so we continue to focus on the enterprise segment, but we've continued to expand our capabilities, and over the course of this year, we've been doing a number of things. First is we've been fortunate to drive really fast-paced growth serving our core commerce and fintech clients. So over the course of this year, we grew over 40%, which we're really excited to be able to do, and going live with some great names all over the world, right? So whether it be StubHub or GE Healthcare, or Ant, Alibaba, or Vinted in Europe, we continue to work with those merchants, grow with our merchants. But also beyond enterprise acquiring, we went live with 4 different new capabilities this year. So we introduced issuing, which is the ability to issue both virtual as well as physical cards. Intelligent acceptance, which is our machine learning optimization engine to drive very high performance in payments. But as well as integrated platforms, which is our marketplace capability. And then last but not least, identity verification. We were very excited about a year ago to acquire a startup called Ubble in the identity verification space that works with great names like DocuSign and Uber Eats. And we've been excited to expand their capabilities this year and launch some new capabilities with them.
Oh, that's great. And plus, you've taken on a new role as president now, so how's that going? That's a big jump.
It's been a busy year. Between the new products that we've launched, we also went live in Japan. In addition to a lot of my focus is on helping our core functions scale so that we can continue to grow with our merchants while we abstract all the complexity in the background for them, right? We're a highly regulated business, so my teams across finance, our treasury operations, compliance, risk, our client operations, we're always working in the background to make sure that we can provide great service to our merchants, but we also have a platform that truly scales with the kind of complexity that we have in the background.
Okay. And some of the enterprise success that you've had has come from working with companies that are in the crypto space, like blockchain.com or MoonPay and Circle. You've also told colleagues, my colleagues, that Web3 has a lot of market opportunity. What percentage of your business at this point is crypto?
Yeah, so today we serve crypto exchanges. Just to be clear, we don't actually touch crypto, right? So the service we're providing to crypto exchanges is essentially the same service we provide to our e-commerce merchants or streaming merchants or gaming merchants, which is a credit card transactions.
Okay.
So our crypto exchanges today represent a little under 4% of our total processing volume.
Okay.
So it's actually a modest part of the platform. That said, we do serve a lot of fintechs as well, so kind of more broadly in the remittance space, BNPL, neobanks. And I think, look, I mean, we believe in the utility of Web3 and blockchain long term.
Yeah.
We also believe that a lot of the movement towards regulation is also much healthy and much needed.
Yeah, that's kind of what I wanted to ask about as well. With the checkout.com kind of famously cut off Binance recently. Take us into the boardroom. Like, what how did you make that decision to do that?
Yeah, I mean, as a regulated business, and with the complexity that we deal with, we take risk management very seriously, and time to time that leads us to reevaluate some of our relationships or look through our portfolio.
Yeah.
Ultimately, when we make a decision to terminate a relationship with a merchant, as you can imagine, we take that very seriously. It's something that we heavily scrutinize and we really think through. Ultimately, we make decisions in the best long-term interest of Checkout, and that's how that decision was made.
Okay. And how did you tell them? What was that conversation like when you were telling Binance about that you weren't going to work with them anymore?
We have very good relationships with all our merchants over multiple years. Ultimately, we have clear contracts with them around their rights and our rights. And everything that we do follows the contractual relationships that we have with them.
Got it. After that happened, did you receive calls from other clients that were in the crypto space?
We have very good relationships with our merchants. One of the things that we really focus on is service.
Okay.
And especially with sophisticated enterprise merchants, I think they like to interact with sophisticated payments professional, and it's something that we really pride ourselves on in terms of how we deal with them. And same thing in the crypto space. We're very close to our clients. They know why we make decisions. They know that we have long-term partnerships with them, and they know that sometimes we have to make decisions as a business.
Yeah. And to your point about the regulations and things like that, have you had any conversations about, considering with, talking about Binance, have you had any conversations about whether to work with crypto companies at all?
First of all, I think it's really important for any business, and we definitely think about it, our business, to be diversified across, a different set of industries, right? So we serve, as I mentioned earlier, we serve a number of fintechs. We're active in serving neobanks, in serving BNPLs. We're active in the traditional e-com space. We serve streaming companies. We also participate in the gaming and sports betting industry. We participate, we serve, either ride-hailing or food delivery. So we have a broad range of industries that we support. We definitely, of course, ask ourselves for any vertical that we go into, what are the kinds of reputational risk, AML risk that we take going on in the vertical. And we don't make decisions lightly. Ultimately, though, I think decisions at a merchant level are more important than at a vertical level, especially in a complex space like crypto, where you're really looking to see how are those organizations running themselves, essentially.
Got it. Well, back to checkout.com. You raised $1 billion Series D at the beginning of the year, and you were valued at $40 billion. And then by the end of the year, you and some others had to, kind of have a reevaluation of the valuation, and it ended up being around $11 billion. Given that the bottom kind of fell out of the crypto space at the same time, do you feel like that was, because you had some on your books, do you feel like that was at all a factor in the devaluation?
Look, I think the change in valuation in the fintech space is not going to be an aha moment for anybody in the audience. And of course, checkout is not immune to changes in valuation like anybody else. I think for us, what matters is really staying focused on the long term, right? Like we believe in focusing on things such as what's our differentiation, what's our positioning in market, do we have true product market fit, are we helping our merchants grow? And driving sustainable growth, which that's why we were so excited this year, as there was sort of doom and gloom around e-commerce, that we were growing 40% in that vertical with our across fintech and e-commerce with our merchants. So again, we focus on the long term and the quality of the value proposition because that's what will determine long-term valuations. Mm-hmm. I also think just from an employee standpoint. A reset in valuation has some benefits in the sense that we're also able to issue options at a lower strike price, which means more upside for employees, and that's something that's obviously valuable to them.
That's great, yeah. And the company had raised, it looks like every year, since 2019, but then you stopped at the beginning of last year, and you haven't raised essentially in about 18 months or so at this point. Are you raising now or looking to raise?
No, not at all.
Okay.
No, so the company was really bootstrapped from its founding, and so 2019 was the first year that the company took outside funding, and it was really about accelerating the growth of the business, which we feel good about where we are now. We don't have any reason or need to look for funding at this stage. We're really focused on executing for the business and driving the kind of growth rate that we experienced over the last year on a sustainable basis.
Yeah. How about an IPO? Is that in your future?
No, I of course watch what's happening in markets, right? And we're very interested, obviously, Instacart, and to watch what's happening as an indicator of where markets are at and where investors are at. Actually, when we did our Series D, one of the things that was important for me was to bring in some public market investors, that do kind of pre-IPO, late-stage investing, because I think it brings kind of a different perspective to the organization and some of the rigor, on your way someday to be a public company. But, as a highly regulated and complex business, mm-hmm. I think that you need to be really, really ready when you go public. And sometimes I make this joke, it's not about the wedding, it's about the marriage, right? It's not about the moment of the IPO, it's about being successful long-term in public markets. And so for us, it goes above and beyond, financial controls and SOX and all that, but it goes into everything that touches our regulatory, our compliance, our risk, our operations. And we really have no pressure to go public. So at some point, yes, but certainly not in the near future.
Okay. And speaking of the current, economic climate that we're in, there's been a lot of mergers and acquisitions in the payment space. What's your take on that?
Yeah, so we compete with a lot of companies that, in many ways, have been built through years of M&A, right? So and multiple platforms being put together. And what we hear from our merchants is it often leads to quite a clunky experience because, they feel like they're interacting with one organization, but in reality, or they think they're interacting, with one organization, but in reality, they're really experiencing multiple platforms. So multiple integrations, different reporting, different data, and it's really far from being a seamless experience. And so that's something that we pride ourselves on with our proprietary end-to-end technology all over the world, single API, single integration, consistency of the experience. I also think when you build through M&A and you have a lot of different platforms, it makes innovation harder and slower. Because as a new regulation comes in or a new payment method comes in, you're finding yourself having to make changes on a much broader ecosystem to keep up. That being said, we believe in M&A when it comes to adjacent capabilities.
Okay.
So if it's something that doesn't touch kind of our core acquiring platform, but is a value-added service that our merchants are looking for that we can provide to them. That's why we were excited to buy a startup, for instance, in the identity verification space. We think that's a really interesting segment in terms of digital identity and digital identity verification in the future, and very relevant in various parts of the spaces we work in, whether it's it's e-com, or it's fintech, or it's gaming. So I think for me, M&A, it just really depends what the intent of the M&A is.
Okay. And with doing all of that identity verification and things like that, where do you see that kind of being used in checkout.com? Like, essentially, like, what's next? You've gotten all those things that you have come out with, in the past year. What's next for checkout.com?
Yeah, so I think for us, two things. One is continuing with the pace of growth, which actually in the back requires a lot of work to make it happen across the world, and growing with our merchants, growing our share of wallet against our competitors, and then also being able to attract new merchants to our platform, but also being really able to scale those new capabilities. So identity verification, issuing, intelligent acceptance, integrated platforms, these are all capabilities we're really excited about, and we want to continue to grow, including continuing to grow in the US. Our roots are in Europe. We have a very strong capability and presence in the Middle East. We also have really strong relationships in APAC. And the US is sort of, in some ways, the most recent geography that we've really invested in from a commercial standpoint, with some really exciting relationships, a couple of great go-lives this year with GE Healthcare and StubHub, but also really excited with some new opportunities that we've recently agreed to, and hopefully will go live soon.
In terms of the future capabilities or the capabilities that you just talked about, what are some of the challenges that are going to be involved in implementation, do you feel?
Yeah, so I think the hardest part is, how do you stay agile and nimble as you grow and become complex, right?
Yeah.
So, and also kind of that transition from a startup that's moving incredibly fast, but also not doing everything in the most buttoned up way, and finding your way to kind of that teenage or early adulthood where some things are done in a slightly more structured way. So that's the balance that we're always trying to strike, and where a lot of my teams get involved. I think to me it's really important that we have excellent cross-functional collaboration. Especially for me, our finance team, our treasury teams are deeply embedded in the products we develop. And one of the things that we really try to make sure is that we've got the right velocity in those teams as we develop new products.
Okay. And to your point about working more in the U.S. and other places, what do you see as the kind of differences between working in the U.S. or creating products for the U.S. versus, say, you've gone into the Middle East now? Like, what are some of the differences of trying to operate in those different types of areas?
Yeah, well, there's a lot of different nuances. Of course, regulatory expectations can be different, how the licenses are given, what they entail, what the expectations of regulators are. There's obviously differences in local payment networks that we integrate into, but it's also, of course, payment methods, right? So adoptions of alternative payment methods can be different across the world. If you go to Europe, if you're in the Netherlands, 70% of e-commerce is going through Ideal, or in Sweden through Swish, or obviously Brazil with Pix, UPI in India. There's a lot of nuance all over the world. But again, this comes back in many ways to our core value proposition, which is to abstract that complexity for the big platforms we work with, so that they can drive the best acceptance rates and performance wherever it is that they want to do commerce all over the world.
Okay, great. And speaking of that, you being in the payments processing space, you are in a unique position to see the payment numbers that flow through your clients. Are you seeing, in terms of the payments flowing through those clients, are you seeing those payment numbers going up or down?
Yeah, we continue to see our merchants grow. Of course, there's nuances, right? Certain geographies or certain segments, but we serve a pretty broad range of industries, and we continue to see demand across the board. I think for me, one of the things that was a bit overblown in 2023 was that fear of e-com really slowing down.
Right.
I mean, yes, it has, slowed down relative to the pandemic, but I think you need to stay focused on the long-term picture, which is we really believe in the continued digitization of payments.
Okay.
We think it has a long runway to go. We think there's a lot of interesting verticals that are growing really fast. Again, it's not just kind of e-com, but there's gaming, there's streaming, there's all sorts of different experiences. And then I think fundamentally, there is a blurring of the line between an in-person experience and the digital experience, right? More and more, you'll go online, pay for something that you go pick up somewhere. Or you'll go online, pay for an experience that you'll go experience somewhere, a yoga class, something like that. So I think the use cases of digital payments will continue to explode over the next decade, and I'm really excited to see continued innovation in the space.
Well, great, and we're excited to see what innovation comes out of checkout.com too. Thank you so much for being here.
Thank you.
Appreciate it.
Thank you, it was a pleasure.
Go out that way.